You're listening to The Media Room, hosted by media expert and author Vanita Kohli-Khandekar.
Radio seems like it is in nowhere land. Even as listenership and ad volumes rise, revenues dropped from rupees 3,100 crore in 2019 to rupees 2,300 crore in 2023. Radio was, in the good years, anywhere between 3 to 5% of total ad spends. Now it is just about 2% of all the advertising money spent in India. Think about it. India has almost 867 commercial radio stations. This includes All India Radio and private FM stations. And all they made was rupees 2,300 crore in revenue. It is by far the smallest part of India's media and entertainment business, which is about 2.3 trillion rupees in size. On reach, again, radio does badly. It reaches just about 260 million Indians, way lower than TV, which is at about 900 million people. Digital reaches 524 million Indians. It's been a constant fight for relevance for radio. To talk more about this, I have with me two very good minds. Yatish Mehrishi is the Chief Executive Officer of Entertainment Network India Limited. It owns Mirchi. Mirchi is India's largest radio brand with 73 stations in 63 cities. It's owned by the Vinit Jain Group. The Times brothers were broken up into two groups. So this is the Vinit Jain Group. Since it is the largest in the business, it is also a great proxy for what is happening to the radio business. My other guest is Shrikant Shenoy. He's Associate Vice President at the Interpublic Group, which also owns Lodestar a media agency. And they do some of the more interesting consumer research, media research across media. Over then to Yatish and Shrikant. One of the first questions I wanted to ask you is, who's listening to radio these days?
Yes, it's a good question, and I expected this to come because you're discussing radio, the oldest broadcast medium. But Vanita, contrary to whatever people say, and we are in Bombay, we think we are the early adopters, everything is digital. It's not the case. And I'll tell you some data because we live in a digital world and people talk about data. So when I took over about 2 years back, we started recording numbers of people who call us. Because radio is an interactive medium, when jocks speak, radio jockey is like a unknown friend, is a companion when you drive back home and stuff. So a lot of people interact when you ask a question, when you run a contest or anything. In the last 4 months, we have got 6 lakh phone numbers in 22 cities. Now, if you look at, and I've been a marketer myself, and Shrikant can, and Vanita, you have written on media measurements. Any leaflet you do on a newspaper, it's about 0.5% of people read, the number of newspapers you do. So now imagine if people call, how many people call? You've been consuming radio for 20 years. How many times you have called a radio station? So the people who are calling are active listeners. But if I was to just extrapolate this number of 0.5% or 0.25%, in 22 cities, we are present in 63 cities. And this is, I'm just saying, Mirchi, I'm not even talking about the entire radio network, If I just do that number, it comes to about 40 million people listening to, which is higher than the last IRS recorded in 2019, which was 30 to 33 million. So contrary to the belief that people don't consume radio, radios are alive and kicking about it. It's not that. Yes, the audience consumption patterns have changed, but that's more to the media thing. So it's not that people are not listening. Habits are changing. And Vanita, I didn't do this for sales. We did for music changes. Earlier we used to play Hindi heartland music at, all Hindi markets, same music. Though everybody knew India is multiple countries and every city is different. But we realized the music consumption was also different. The people listening to radio station are different. So to give an example, Bombay, 70% listenership happens in cars, 65% males. When I look at Guwahati, it is less than 25 years of age. So it's maximum 65% people listening are 18 to 25. So now I have a music which is very different in Guwahati and in Bombay. A music very, very different in Bombay and Delhi. Earlier, our music used to be same in the Hindi heartland or the Hindi speaking stations. So that resulted into change in music patterns in our content strategy, in our jock hiring strategy. And when I look at this listenership, so it's there. It's just that in the hula-boo of, big streaming world, and we all are, I would say, the culprits as well as the early adopters who talk about streaming world so much that we don't look at radio on the side. the business has shifted. It's more retail. It has to be like, because radio is a hyper-local medium. So to give you an answer on that, it is alive and kicking. People are listening to radio. Yes, the consumption habits have changed. It is no longer, maybe the TSI would have been lower, but that's true to any video medium. We are living in a short form. The behaviors have changed. The media consumption times have changed. So the time consumption has completely reduced. So we are fighting that world. We are fighting double screens, dual screens, and good part, radio has always been a passive medium. Unlike you watching a TV, which was active appointment, now you have a phone in hand, so TV has also become passive. But radio was always a passive medium. It was always a frequency builder. It is still the last mile consumption medium. You go anywhere, you're still listening to that. That's the last mile advertising medium. Apart from one odd outdoors, you can talk about it, but still the last mile medium. So I don't think people are not listening. Yes, people are listening to it, but with every medium, it has its own challenges. So we'll talk about the challenges, but to address the elephant in the room, people are still listening to radio. Important is to look at the data differently and look at it also.
You're so right, because this is something I face when we talk about newspapers, when we talk about television. But the fact is, all media coexist. Their shares and their importance and the role they play in a consumer's life keeps changing. That's my take. Even in the US, when newspapers have fallen hugely, it's still there. It's still 21 million copies are sold, of newspapers. Shrikant, I want to bring you in here from the media investor, media agency perspective. There is a lot of talk about the relevance of radio as a medium. Where do you see it in the ecosystem? And we'll come to the finances later, Yatish, at some point, and the size of the medium. But where do you see it and it is a completely ad dependent medium currently. So where do you see it in the media ecosystem? How do you view it as a media investor?
So, radio continues to be a really important part of the mix for our advertisers. And when we look at it, as a medium, we see what is happening in the medium itself. Like, we hear a lot of talk about traditional media dying, but I think one needs to look a little closer and see where the real drop is happening. Probably TV and print is where there's a huge bit of churn. Within the TV ecosystem itself, there's a lot of churn in terms of connected TV, HDTV, various other platforms coming into the picture. Print also is undergoing a challenge. But when it comes to radio, really, that's one traditional medium that has held its ground. And really, there's no real challenger to it in a sense. The medium still is very attractive the way it is. It's seen in the kind of market shares. So around 2% market share continues to hold from a longish period of time. So radio continues to be what it used to be for advertisers. We see it as a medium that is extremely important when it comes to, say, driving frequency. That's well known. It is a great frequency builder. It is something that is relevant to advertisers across the board. Like we see traditional TV playing a big role for FMCG brands, say, or print playing a big part when it comes to auto. No launch is complete without the full page ad. But radio is one medium that has been able to adapt itself to all kinds of advertisers and needs, whether it is auto, which continues to be a growing part of the radio advertising ecosystem, or if one looks at local advertisers like coaching classes, training institutes, which also is an important part of the radio advertising mix, or regular impulse categories which continue to advertise on radio. It seems to have found a place in every advertiser's mix. It is an extremely versatile medium. We continue to use it, as we have always been doing ever since media existed, as a great frequency builder, a great place to drive engagement, because we see that we've successfully used RJs to drive a lot of engagement for our brands. So we've actually used them as influencers, doing things like test drive with an RJ, where the RJ actually drives the car across town and posts it on the social handle and amplifies it. And that gives us a huge amount of mileage, because RJs have a really strong connect with their listeners. They have a strong following. And that's something which I think not all brands have yet tapped into in this whole influencer age. So definitely, as a medium for engagement, for frequency, it continues to play a great and important role in the mix.
Would you be able to share which brand that was for, the RJ driving the test drive?
That was the most, we've tried it for many, but Tata Nano was one brand where we actually used this quite extensively. In fact, When it came to taking our brands to smaller cities like say Surat, we actually use the RJ to drive around town because it's very difficult to get engagement through digital. And at that point of time, digital was not what it is today. The RJ was the only one who had that local connect, who actually knew his listeners, some of them one on one. The kind of engagement we got at that point was tremendous. I mean, whatever the product may have been, that kind of lift we got in metrics through RJ engagement was something we couldn't really get through other kinds of regular media activity. So it was extremely useful for auto, and we continue to explore ways to drive that connect for other brands as well.
Because you're talking about auto, we just did for Mahindra electric vehicles just recently. So we're talking in today's time also for Mahindra electric, the two latest, the Wow electric vehicles which Mahindra has launched, the RJs were doing the same thing. So it continues to be used as they were the oldest influencers in today's world. Influencer marketing become big, but RJs have been the oldest influencers in those markets.
Funny how everybody's being called an influencer today, but they're doing their jobs. I mean, the RJ is doing his job, or like the VJ is doing. But it's very nice to hear these views because there are a whole lot of questions in my head. And over the years, whenever I've written on radio, we are still at 2% of ad spends. And I think post-pandemic, the fall in advertising, while we have recovered somewhat, I think radio was at about 2,300 crore in total advertising revenues from, I'm going by EY numbers. It's roughly 2% of ad spends. That's where it has been. I think it fell from over 3,000 crores. So it's recovering. I think this year we are hoping it will be 2,400 or 2,500. But फिर भी छोटा है. Why has the medium not expanded? And Yatish, you and I have had a conversation on this. Last year there was some recommendations were made to the Ministry of Information and Broadcasting on making it mandatory for FM receive. If I was to take the last IRS figures, Shrikant, you're more familiar with them, and I just take a 5% jump in listenership, we're talking roughly 260, 270 million listeners. Correct? But it should be much more. You're talking about a smartphone population of 650 million. I'm talking smartphones. I'm not talking, because FM receivers could be on all phones. Correct?
Not all phones. That's the biggest challenge I have, Vanita.
Not all phones. Okay, now you have to explain this to me. Why are we not at a better number on reach and revenues? And Shrikant, I want you also to jump in on both these questions.
So, Vanita, I'll address both the questions on the smartphone. That's a challenge which I said. I'll come back to on that. But on the numbers, why not going up? There are multiple things. A lot of money has gone to the digital world in the last 10 years. Initially, people thought brand. But now if you look at business, everything is going towards performance marketing, correct? Because the CFOs are asking results on that. So look at 3 points. One, in the last 2-3 years, post-COVID world, because the business is not doing well, everybody was looking at profitability. Clients put pressure on agencies put pressure on publishing houses, and the prices crashed. So if you look at the yields which have crashed, the volumes are still very high. The yields have crashed from, it's still 25% down pre-COVID levels, which is a very, very sad story. Even though the listenership is going up, the number of clients are going up, but the yields are down because the companies and clients are putting pressure, and they have own pressure. Because if you look at last 3-quarter results also, profitability is doing well, revenues are not growing. So people are cutting cost and making money. It's not the natural growth of revenue growth and it results into profit. So there are pressures on agencies. Agencies are fighting to get clients, and they are putting yields for each publishing house. I'm not saying radio, it's across the board. And we talk to all agencies, they are also facing the same pressure because the clients are putting immense pressure on the yields. So yields are down, and that's one reason the industry is not able to grow. I was with Arvind Fashions 3 years back, and I can take a ring. A lot of brands are forced to spend monies on e-commerce, like 3%, 5% as a marketing service. So and that's it just for listing. I'm saying a lot of money. You will keep hearing quick commerce saying 1,000 crores advertising revenue. It is a zero-sum game. It's not going to be like this is additional money is coming there. Some money is going to go out. So that is what is happening. So the brand building money is completely stopped. It is largely moving towards performance marketing, economy, and the company's earnings not being so great, the revenue not being so great. So there is a cost cut pressures. And that's the reason the yields have gone down. Even the behavior change where we say, and people say we are a very small medium, we don't do radio, it's fine. But let me get, everybody's talking about that influencer, everybody's talking about that e-commerce side, let me do a performance marketing spend. So that is where the spends have gone down on radio for the last 4 years and not coming back. To give you perspective on volumes, we are higher than pre-COVID levels. Number of clients are 15% higher than pre-COVID. The mix has changed from corporate to retail. Now, you also know corporate will spend more amount of money when a Tata does a campaign. The amount of money they will spend compared to a shop front in a smaller city will be very low. The rates will be little different. So because it has become a retail skewed, earlier pre-COVID, it used to be 50% corporate, 50% retail business. Now it's become 70-30. 70% retail, 30% corporate.
When you say corporate, you mean national advertising
National advertiser.
with a national footprint.
Yes. So when you look at national advertisers have gone down, they have moved toward digital and not just digital, not digital ad sales, they moved to digital performance marketing where the monies have gone by. That is the reason the industry, traditional mediums are not able to grow because the yields have gone down. It's not that the volumes are low. The volumes are still high. The mix has changed. The type of clients have changed. So that's where the business has struggled on the ad sales revenue. And for that reason now, to compensate that, people have started doing events, activations, using influencer marketing, or we'll say, doing multimedia solutions. For every traditional medium is now doing brand solutions. You can call it multimedia or brand, is to compensate that because everybody's fighting for the same amount of money type of stuff right now.
That's why people are dropping the word radio from their companies. You guys did it, I think, in 20 or 21.
Yeah, we did just for post-COVID.
Post-COVID.
2020.
HT did it last year, if I'm not mistaken, right? So that's why. And I think roughly half your revenues are non-radio now?
For us, because we took over Ghana, so now yes, 50%, that was my target 3 years back, to make it 50% radio, 50% non-radio. And be true to the company's name of entertainment and become an entertainment company rather than a radio company. So yes, now we are a 50% radio and 50% is non-radio, which includes Ghana also.
Ghana, and you also create content for streaming programs.
We do content for streaming platform. We do almost 300 events a year. So we do a lot of events, branded content.
I'm going to come back to them. But Yatish, what you have talked about is lower yields, basically coming from lower rates. And Shrikant, I want to bring you in here because we'll address the reach question, because the thing about smartphones and why more people don't have radio. But Shrikant, where are we on CPMs, or the cost per thousand for radio, and why are they lower? Is it because it is treated like a performance-oriented frequency medium? I mean, as a media investor, where do you come in on that? I mean, you're the guys who are pushing down the rates. So,
Right. See, radio remains the most cost-effective medium, and there's no doubt that when it comes to getting great ROI, video remains the number one medium. So, in a sense, that has not really changed from what it used to be. We still see around, say, on an index of maybe 100 for radio, 100 for TV, you have radio coming in at about 80x, 70x or so. So clearly, radio remains one of the most attractive mediums for advertisers, and it continues to play that role. However, when it comes to television, they have been able to successfully reinvent themselves in the sense that the kind of properties one can look at investing in on a television, like cricket, for example, had been really successfully packaged as a great viewing magnet, getting you a great amount of reach, though at high costs. But the kind of impact and the kind of lift it delivers across metrics, whether it is awareness or consideration, or getting a quick visibility in a short period of time, that kind of excitement is something that, in a sense, television has been able to achieve through a really aggressive promotion on the part of these broadcast networks. So something of that sort, that kind of a redefinition and a kind of aggressive push, is something that we've seen more in the TV space than in most other mediums. I think that's one big reason why it's difficult for radio to make space, because it's starting out with a huge disadvantage, because TV has always been seen as the numero uno medium, as the medium which will deliver you that pan-India coverage. And in a way, they've been able to successfully reinvent themselves, as I said, through properties, through connected TV, HD TV, great viewing experience. So there are some inherent built-in advantages of these other mediums which make it difficult for others to grow, in a sense. So I think the fact that radio has been able to hold on to that 2% share is in itself creditable. I mean, I think that itself is something which would be very difficult in today's environment where, advertisers seek newness in everything. I mean, for example, out of home as a medium has also been able to hold on by in a way reinventing itself with digitization. We call it digital out of home now. That is, in a way, help them drive greater share of the pie. Somewhere, maybe radio also needs to do something to reinvent itself if growth is something that we would expect to see. But as I said, even holding on to that 2% is great. And we see the volumes month on month. We track and we share with our clients what's a ship. And we see radio continuously holding on. The advertisers like auto have continued, or services, finance. These are categories which continue to invest and believe in radio. So that is a great plus going for it.
You've addressed like 4 questions which I have for Yatish coming in. But essentially, Yatish, programming has been a big problem for radio because your license conditions from right from the word go, from 2000 onwards, have walked your revenue structure because your license fees were crazy. In every phase of licensing, the industry has paid out more money than it has made in revenue in that particular year. So that has been one, एक जो बोलते हैं ना deformity private FM की birth में ही हो गई थी. And also you're not, I don't know why news was not allowed. It's still, you still have to take 20%. You can do 20% news, but you have to take an AIR feed. You cannot do news on your own. For a medium which is so local, not being able to do news is a huge handicap. And then there is, I don't know why, spoken radio. So if you're talking about a market, we're doing a podcast right now. The fact is, podcasts, I don't know how good they are as revenue generators, but podcasts have taken off in India in whatever small form. Why have there been not more variations in programming formats on radio? With due sympathies for the licensing conditions in place.
Yeah, so see, you touched it right, but the thing has been, there has been licensing conditions, news, current affairs, and sports has not been allowed. Shrikant touched upon sports. A cricket commentary is allowed on All India Radio, but not on FM radio stations. Now, just look at in Bombay, you not have the frequency of All India Radio in your car. If listenership is happening in his car, and if I want to listen to a commentary, you can't because it's not allowed. You're not allowed to do even current affairs. You're not allowed to do news. So their restrictions makes you just to play music. I can innovate on music formats, and people have done. If you look at competition, Nilesh Mishra has done a story format. It was like a podcast only, and it was built on stories. Our longest standing content is Sunday Suspense in Calcutta. If you are Bengali, if you listen to it, people vouch by it. It's been running for last 10 years. So it's been the oldest podcast form. It has been going on. But you touch it right. Because we are an ad-funded medium, there is not much ad revenue coming in. In podcast, you can do more podcasts, but there is no monetization visibility. I see what you get on radio per se right now. So it's not that we are not trying to innovate. We have been bound by a lot of restrictions on the type of content we can do. So we are supposed to do only music-related content, and with the business going down, and we don't have multiple frequencies in many stations. We tried that in the phase 3 when we took multiple frequencies in top 10 cities to innovate on that. The second radio station will innovate on that. But COVID happened, demonetization happened, the business didn't take off, the yields have gone down. So you're not able to innovate on the second station. Everybody just has one frequency. So they will go towards the mass media. What mass wants is music. All research says when people come to listen to radio, it says they want to listen to music. Maybe that's what we have already only offered, and that's the reason they are saying it. Or even if I do it, because I don't have any the medium and the business is right now not growing as it used to grow 10 years back, people are limited to innovation and subject to the 3 conditions also of not able to cover news, current affairs, sports, or anything. Even for that matter, Vanita, ICC or BCCI comes with guidelines of even doing a score update, that you can't do a live update. You have to do a deferred update of this is the score right now. So you can't do as the wicket falls. If radio is a media which is a live medium, in India-Pakistan match and a Babar Azam gets out, I can't tell him that, he's out. I'm ready to break the song and give a breaking news like a TV or a news channel, but I'm not able to do that. It's not the intent. It is just that you're handcuffed on both hands and say you're not allowed to do this.
That is why there is so much talk of, so you have your Ganas and your Spotify's for streaming music. You have video streaming, you have podcasts happening, but you have this, it's a very anachronistic situation to be in. You are an audio medium, but you are limited to one genre of audio programming. उसके आगे आप कुछ कर ही नहीं सकते. So let's assume that it is going to be only music. Where are we on increasing reach, overall reach? Why are we not being able to progress there?
So, Vanita, that's if you ask me what is the biggest challenge, I think people are still consuming. Right advertisers are using it like real estate. The politicians are using it. I'd say election advertising is always at the highest level type of. So you look at any elections, I think that works as the best medium type of. So you're not worried about people not listening. My worry in the future is the smartphones. And that's where we spoke about earlier also about Ghana. These smartphones, the problem is any smartphone which is more than 15,000 rupees doesn't have an FM tuner. So that listenership, even if I want to grow the listenership, my worry is going to be the hardware. The software is not a problem. The problem is the hardware, where in our homes the transistors have gone by. No longer you have the music system with the cassette system. No longer they are there. Yes, Saregama helped. I think thanks to Vikram of doing Karwa and having FM radio. The Bluetooth speakers come with FM radio. So that is a delight on that part. But the biggest consumption, which is the mobile device, which has become the device of whole, that's the core device everybody has. iOS, Apple has not been having FM tuner from day one, any range of phones. Smartphones more than 15,000 doesn't have FM tuner. This is where the key issue lies for FM radio listenership to grow. The day all smartphones have FM tuners again, the listenership will have a different flip. So it's not that people are, because you don't have consumption. And my office used to be 10 minutes away. I had to buy a radio set in my home to listen to music. Because if I don't have, my distance was 10 minutes or now it's half an hour, I can listen only in the car. Where am I going to listen? Because if I'm using an Apple phone, I don't have a consumption device. So the challenge is going to be the hardware and not the software. We are doing really well. In fact, to give you a thing, we were proud receivers of a President's Award for voter awareness in Delhi. We were the only media to get that award of voter awareness. It's not that we only participated and we won the award, but not just radio stations, print, television, everybody. So the medium is effective. Media people are listening to it. The challenge is going to be get the hardware. And we are thankful to the TRI who recommended again. Recently the TRI commission have come again that FM tuners have to be mandatory in all smartphones.
That was September last year. I remember.
It's come again recently again.
Has it become policy or no?
No, so they have mandated. They've given an advisory. They're not mandated. There is a discussion which are going on between Mirchi and luckily for us now the ministry is same. So we have representation going towards the ministry that it should happen. In times of calamities, even a telephone network doesn't work. FM radio works. It has been a proven model across globe. When a flood situation or Hawaii flood happened or any fire happened, the radio network works the best. It's the simplest medium, the easiest medium. And if FM tuners are available on smartphone, people are able to communicate that. So that's the biggest challenge, Vanita, we have in today's time to grow the listenership. The listenership, as long as it is there, wherever it is there, people are consuming it. If we can get the smartphones thing going up, that flip will be much higher.
Speaking of listenership, one of the issues, Shrikant, has been the non-availability of metrics you have for the 4 metros. And I think IRS hasn't been done since 2019. 2019 was the last numbers we had. Does that ever impinge on the way you look at the medium? And also a lot of the advertising, like Yatish was saying, is local now. You're talking 50-50 now, Yatish, or more?
No. Pre-COVID was 50-50, not 70-30.
So is that a lot of this advertising doesn't go through a media agency? Is it direct advertising? I'm just curious, Shrikant. Therefore, does that change your perspective of the medium?
So, talking of the measurement challenge, actually, we don't really see it as a challenge because it's not something that advertisers had ever been used to, even ever since radio started. It has always been, say, television or digital, which have been the mediums which have traditionally been in the focus of the measurement space. And when it comes to the current day, I think things have gotten a lot easier because there are a lot of substitutes available. We do our own proprietary research called Connections, where we measure pretty much the same things that a TJR and IRIS measures. In fact, we go one step further, going beyond reach to effectiveness. In fact, the impact of radio across the funnel, like we can see how radio works at the top funnel, median versus mid funnel and bottom funnel. So that gives us a very real and implementable kind of a metric to work with. Like we see that radio continues to be a great top funnel medium. It ranks among the top 10, right up there. We have also been able to see that there's a small shift in terms of engagement, where people are moving towards slightly higher listening, as in they listen for more time than they used to. So clearly, the engagement levels have gone up. I mean, it could also be a factor of people being stuck in their cars in traffic and simply listening more. But whatever it is, there is more engagement. We see how it is different versus a podcast where a lot of the younger audiences who like snackable content, maybe just 10-15 minutes, that's where the shift is going towards. So all of these metrics are there, they are available. Further, we do a lot of modeling. Now, modeling has become extremely easy. There are off the shelf modeling solutions, which say many of the large digital tech giants have. See, Google has its own system, which is available for free. We have our own proprietary system called Interact, which allows us to do modeling even for the smallest client with the minimum of metrics, because we use other surrogates to fill in. So it has been able to isolate what is the impact of each medium on the results at the metrics that matter, like purchase or consideration.
On the top funnel bit, just to interrupt, on top funnel bit, can you just give an example to my listeners on what category where you think it works well as a top funnel, middle funnel, bot?
So, when it comes to doing our auto launches, and we've been handling all the top auto brands like Tata Motors, Mahindra, as Yatish said, radio has been an indispensable part of the mix. So whether it is the launch of the, say, a Mahindra Thar or the new electric vehicles they are putting out, you will see radio in the plan, whether it is in the form of spots or RJ engagement. It is almost part of the auto launch grammar, so to speak, that you would have. There will be a full page ad, there will be radio, there will be a certain number of things which are definitely there. For that kind of an audience, which we may look at radio as a passive medium, but there's this very strong impact in terms of branding when it comes to, say, in-car listing, where you are talking to the very audiences that you want to finally talk to. I mean, upgrade your car and move on to a better car. That makes it a great medium for, say, a category like auto. Needless to say, when it comes to FMCG also, it works well in a different way. I mean, there it could be more about reinforcing and driving the top of mind recall, so that when it comes to the point of purchase, it's the one brand you think of. So I think it's an extremely versatile medium.
But Yatish, you mentioned more performance marketing. The examples that Shrikant is sharing seem like more like brand building, recall. Shrikant, do you see it sort of veering towards, or it's all uses? I'm just curious. Is the medium more about, because you said frequency, and I would have thought that would mean more about recall and awareness. But Yatish is saying performance marketing.
No, Vanita, what I meant was marketers are spending more money towards performance marketing on digital, not performance marketing on radio per se. Yes, radio works really good for test drives, to get people to the shop, to the showroom. Radio works a great medium to look at a test drive, to get footfalls to your showrooms, be it an apparel, be it an auto and all. When I meant performance marketing, I was saying the budgets are moving towards performance marketing on digital rather than brand building. People are not spending as much as they used to earlier compared to it right now. So auto is a great example. Real estate is a great example, where real estate, because it's a last mile thing. And when you touch measurements, and I'm just adding up on that, the cars have gone from 30 million to 60 million. There are marketers who are asking for measurement when there is measurement available. They know that they complain about traffic, and that's what they're listening to radio. But when you come to spend, the first question you ask is who is listening to it. You are listening to the cars, but you're asking me data point, and as I said, I gave you the 6 lakh. If I was to give my own data, people would not believe it. They would want a syndicated research. But our same data coming from a digital large tech player would be like a Bible.
I've had this conversation just recently with Girish Agarwal. He says Google koi number bolta hai, you guys accept it. But for TV and print and everybody, you want proper metrics. But this is a different conversation. And Shrikant, I'm going to invite you again for this on this whole issue of metrics, which is bothering me as a writer more than anything else. Shrikant, sorry, I interrupted you. You were talking about how it works across the funnel for different categories.
Yeah. So what we've been able to see through our research, and we've done a study of some 10,000 brands leveraging our global network to see what is it that drives, say, visibility and, say, variance, what we call it, in the sense of embedding how strong a brand is able to derive or amplify itself leveraging local cultural levers. That's something where we can identify what's the role that television is playing versus the radio versus out of home and so on. And we see that radio's role is definitely strong there also. In fact, we've been able to drill it down to a brand level, not just at a category level. And we see that every brand's DNA definitely has a strong contribution of radio in it. So, when we've got metrics as accurate as that through the help of modeling, you don't really need a RAM anymore. I mean, RAM definitely needs to be there out there in the industry for the larger good of the industry because not everybody has access to modeling tools. So definitely whatever RAM is doing, the four metros is something which is good, but I don't think we are missing it really. And when it comes to larger and smaller advertisers, well, we have a mix of both. We have a lot of local advertisers also. Like, say, we had an office out there in Chennai where, a whole lot of local retailers, jewelers, coaching institutes are part of the mix. And we're able to, in a way, recommend radio for multiple reasons, not only through our experience across other brands, but also through the kind of feedback that these clients have from their own networks. Many of them, their customers, their staff, vouch for the effectiveness of radio, their loyal radio listeners. I mean, as much as a newspaper is part of the morning routine, so also radio, certain programs, certain shows, certain RJs are very much loved and liked in these local markets. And so there's feedback from the client as well that, definitely let's look at some presence on radio as well. So I don't think metrics is really making much of an impact or affecting our investment in radio to a large extent.
Yatish, if I was to ask you, what are the two or three things, and you can answer this from a Mirchi perspective or from an industry. But for me, Mirchi is like a great proxy for the industry because you're the largest, 63 stations. I mean, and you've been at it right from the beginning. Even in 98, when there was no private, I mean, Times was the guys who had that band on AIR, which used to run the FM station. So, what are the two or three things that are needed to get radio to a position that it deserves as a medium? Because it's a medium with, if I include AIR, you're talking about a medium with almost over 90% reach. And if you're talking about growth coming from small tier 2, tier 3 towns. So, I mean, the medium's potential is obvious. So, what are the two, three things that you think are needed, whether it's a policy level, whether it's at an industry level or at the company level?
So two, three things, Vanita. I'll just touch first what the industry needs to do. Industry needs to be true to the medium of playing more music and little less ads. And it's a double whammy because if I reduce number, because the yields are down, you're playing compensating by playing more ads. So that's not right. As an industry, there are some players who play huge number of ads. It become like a classified station rather than a music station. So from an industry point of view, I think people need to really, really look at and be to the medium that you should play. The print used to call the ad edit ratio. Even in radio station, the music to ad ratio needs to be really, really looked at.
What is it currently?
So on an average, it's right now 10 minutes, but it is superficial because some stations can go up as high as 30, 35 minutes in an hour. When you play 35 minutes of ad or 40 minutes of ad in an hour during festivals, you're not doing just to the medium. You're killing the medium before even the people are killing it, because you're not coming to listen to ads on a radio station. So from an industry point of view, I think even if there is no code from the government of the ad music ratio, people need to sit together and get that right, because you can't kill the medium like that, because that's number one. The jock content can look at the type of audience you can do. So when I said Bombay 70% in cars, 65% male, if I can talk more on finance, address to the audience, don't do what you want to speak to it. If you can do that, that's an innovation the jocks can bring in. You can't have the same jockey doing the same stuff again and again, again and again. So that what the changes the industry level we should be looking at. For most importantly, the music part. Coming on the external stakeholders, yes, the TRI is recommended, been for last 1 year now. We need the government to support us on allowing three things, which is news, current affairs, and sports. It will help us a long way. The second is, as I said, the most important for me, which keeps me awake, is the FM tuners in smartphones, because that will give a biggest flip to the network, to the industry, because the listenership will keep going up. The third is we need to sit with the music industry labels to understand how do we stream radio on digital. globally, radio stations are allowed to be streamed on digital medium. Because the licensing are so high, the music licensing so high, you are not able to stream the radio stations on a digital network. So even if the smartphones was not there, just imagine if I had a digital app and I could stream it. I don't need a Ghana or a Spotify to do it, or I don't need a smartphone because then I'm there as an app. I don't need a FM tuner. So if that was possible, then the medium's longevity will also be there. You could start measuring it because it's a digital medium. What people, you could do performance, you could do banners, you could do lot many stuff. And that what, if you go back to US, Clear Channel 850 FM stations are available online. We are not able to do it.
What holds it back? Is it a regulatory thing? I'm not getting that.
No, it's a music license. The music licenses are prohibitory. You have seen how free music streaming service have closed down. Ghana closed down, Wing closed down, Reso closed down because the music licensing was prohibitory. People have to pay for music. So I'm just saying we need to sit with music. I'm not being against the music industry. It has to be set through and get the right pricing for the medium to survive. We took over Ghana, we went behind a paywall because we said we'll not give you free music. And that's where it works. Similarly, for radio, if it can work out, then the longevity will be there. The medium will flourish much more. I think so. Between government, the TRI recommendations can help massively. I spoke about the internal stakeholders of being true to the medium on music, and support from the music industry to allow the streaming of radio stations at the right price will also help a long way.
Perfect. Because you're talking about reducing your content cost. This is just to explain to my listeners that when you say licensing, you mean that for you, licensing of that music is a cost. And if that goes down, it makes it more viable for you to do it online, correct?
Yeah, online the pricing are very different. When Spotify or Savan pays, that the costs are very high, which a radio companies cannot afford to do digital. Otherwise, the radio company would have been the first to be the music streaming services rather than a Ghana, Savan or a Wing coming in. The radio companies would have done it. But because they were prohibitory and they didn't have the VC funded money, and that's what we saw in the last.
How much more is it in radio? Just curious. I mean, if I was, for you, it is 2%, not 2% of, I remember there was a decision by the court.
Yeah, so it's sub judice. I don't want to touch on.
Okay.
Yeah, the court cases goes on. So now I'm part of the CI. I was talking to Devra. I think the industries need to sit together rather than keep fighting. It is not helping them, not helping us.
So fine, on content cost, therefore. Shrikant, to come back to you again, the last question to you would be, and I love the fact that you look at it across all sorts of medium, unlike many of us here. What would be your 2 or 3 pieces of advice to radio operators? And I know you don't want them to increase their yield, but if they had to get a better share of wallet or a better rate, or even as a medium, what would your advice be to them?
So, first of all, I think from a marketer's perspective, from our client's perspective, we look at radio often as the medium which will take us to the last customer sitting down there. Like, say, for an ITC, we know that, okay, we want to do, say, a Mahakumbh, or we want to reach a certain rural pocket. So far, digital print has been one of the key ways to get there, especially with, smartphones and feature phones going right down there. But I think radio really has a strong local connect, that strong last mile connect, which is not being leveraged fully. I mean, they have that advantage, and we know even the Prime Minister uses radio for his Man Ki Baat to reach that kind of an audience. So somewhere that the reach of FM as a medium to be able to reach every corner of the country, that is a strong advantage which I think no other medium really has. And that's something which I think radio can use to advantage, especially for FMCG, where that clearly is still a bit of a challenge when it comes to planning. That's really important. Second, we've been handling clients like Spotify, and they bring in a lot of the kind of success, best practices that they've done across the world into India, like, say, their Wrapped campaign and so on. So, somewhere it's an extremely savvy kind of a platform which knows exactly what works with the Gen Z. There's a huge amount of research they've done when it comes to targeting these younger audiences and what really interests and excites them. And they've been able to successfully use that in reaching out to them. And Spotify managed to get its position at number one in a very short span of time, thanks to all that data back investment that they did. So somewhere maybe radio needs to also invest a bit more in research in terms of understanding its listeners a little better, in terms of understanding each market a little better to see how can it become smarter, more aggressive, more dynamic, like some of these podcast platforms, because they have their own strengths and a lot of legacy because they've been here for much longer than many of these podcast networks. So I think somewhere they need to leverage that to become a little stronger. Lastly, of course, in terms of leveraging their RJs, which we discussed earlier in the discussion, they are extremely strong in this influencer age. And, we see why many influencers go up and down in our influencer tracking mechanism. We have something called an influencer power index, which tracks social mentions and sees how the ratings fluctuate. When it comes to RJs, it's extremely stable. So whatever network, whatever station network I look at, the kind of stability that these RJs have in terms of their connection with audiences is extremely stable. So unlike some others who keep going up and down depending on, say, the success of their movies or what kind of statements they make in media, it's a bit of a volatile game. But RJs have a strong, loyal, consistent, enduring kind of a connection with their listeners. And that's something which, again, only FM has. So maybe they can leverage that to advantage in a more powerful way.
Super. This thing of RJs being stable influencers is completely new because I've just done huge pieces of work around influencers. But in the Comscore study, which is what I used, I haven't seen RJs mentioned, all sorts of celebs and others, but RJs nahi dekhe maine.
Yes, it's a huge world. And, when it comes to influencers, definitely the top bracket and whoever scores right on top of these metrics will be the film stars, the cricketers, a whole lot of TV actors also who's by sheer kind of reach and the kind of work they do enjoy a huge base. So definitely they are right up there. But as I said, the cost, the ROI of investing in such influencers is also extremely high. It's a bit of a hit and miss because we need to see whether that influencer matches the brand or not. RJs may be in the tier 2 or the second tier of in terms of the sheer ranking score. But when it comes to the variance in terms of the levels of the engagement and the various metrics that we track, the variance is a lot less. So they are fairly stable. Whatever money you put in behind an RJ, you are sure you will get the returns for that. So, it makes much better sense for advertisers to get a kind of a short bang for their buck.
Super. Thank you so much, Shrikant, and thank you, Yatish, for both of you for your patience and for taking some tough questions on this one. Because I really think that it's such a great medium, but just, you can't see the scale when you look at the numbers. It's just a travesty, I feel. But anyway, thank you so much again for joining me.
Thank you, Vanita. It was a pleasure. Thanks, Shrikant. It was a pleasure.
The first experiments with private radio happened in the late 90s. Then, in 2000, auctions were held for private FM frequencies. But by that time, almost every other media, whether it was film, TV, print, had raced ahead. Because they'd all liberalized, everybody got freedom to raise money and to do their own thing. Radio's freedom came with a heavy license fee burden and conditions that didn't allow firms to own multiple stations or broadcast news and current affairs or even sports. This dampened the medium's ability to monetize or do interesting things with programming. As we heard from Yatish, some changes have been suggested by the Telecom Regulatory Authority of India, but they are yet to become policy. If and when they do, there is so much more radio could do and so many more people it could reach.
You've been listening to The Media Room by The Core, hosted by media expert and author Vanita Kohli-Khandekar. Do stay connected with more of our coverage at The Core. You can check out our website or sign up to our newsletter at www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. If you have any feedback, you can write to us at feedback@thecore.in. That is feedback@thecore.in. Thank you for listening.